Hi friends, Srinivas here, and this is the video we have all been waiting for. This is a seventh video of the technical analysis, and in this video, we're going to suggest an algorithm which the beginners probably can use to buy shares. So what we're looking for is a flowchart for an algorithm which will give a step-by-step input to buy our shares, do the calculations, etc. Okay, so the first step is definitely study the stock price in the primary time frame. See, for beginners, usually we trade once in a day. Therefore, weekly is our tide or the primary trend. Okay, and you can draw support resistance lines, you can draw trend lines and study it. Then we have to see whether primary trend is bullish, bearish, or flat. Okay, so all the text here is given for bullish, but remember for bearish it is just vice versa. Okay, so if the primary trend is bullish, then you will see that the price action, the view or the trend according to Dow theory will be bullish. Okay, you can draw the lines and I'll show it to you shortly. And you can also see MACD, which is the indicator, moving average convergence divergence, whether the blue line has just crossed the orange line or it's already above the orange line, which means is it already bullish or is it becoming bullish? Okay, and once you study the primary trend, if it is bullish, then you have to study the stock price in the secondary time frame. Okay, so primary if it is weekly, secondary for us is daily for us beginners. Okay, so in the secondary we have to see whether we have hit a local low after which our stock price is become bullish or is going to become bullish. Okay, so this is for bullish and bearish or flat, vice versa, right? So for ensuring that it has become bullish, we have to see whether we have a good green candle with good body size. What is body size? The close price minus open price. Because it's a green candle, we have a good green candle with good body size and good volume. Volume is very important, as we have discussed in the previous videos. And is there a positive crossover of the EMA? That is the 5 EMA exponential moving average greater than 13 EMA and which is greater than 26 EMA? Okay, if this happens, we know that in the short term we are doing much better than the midterm or the long term. Okay, that's the bullish signal basically. Okay, and do we have a bullish candle or a chart pattern? Do you have a bullish engulfing, harami, morning star, a hammer or inverted hammer when you're in the down trend, inverted head and shoulders, double bottom, cup and handle? All these chart patterns you have studied in the previous videos, and we have to see whether our bullish movement is supported. Is there any chart pattern which is indicating this bullish movement? Okay, then we have to see whether MACD has is become bullish or is going to be bullish. Whether RSI is bullish. Okay, RSI is relative strength index. If you are around 50 to 60 and the trend is up, then it is bullish. If it has already gone beyond 80, then it is in the overbought stage. Anytime the reversal to selling can happen. Okay, but if you are below 80 and you are in an uptrend, it's a bullish signal. And vice versa, if for bearish, if you are going down and you are around 30, 40, but you are still above 20, then it is bearish. Okay, if you are below 20, it means that you come to oversold, and anytime a reversal to buy can happen. Okay, so we also have to check whether DMI and ADX is bullish. That is DMI plus blue graph. Is it greater than DMI minus signal, which is the orange graph? Okay, see, blue, orange, etc. are all colors that I'm saying from in.tradingview.com. Suppose you are using some other websites, then these colors might be different. Okay, but these sort of patterns and indicators tell us whether there is going to be a bullish trend now. Okay, in the secondary time frame, that is what we are looking at. Once we ensure that all this is happening and we are sure that bullish trend is happening, then we have to compute our stop loss. If you remember, we explained in a video what stop loss is, and you can place it at the lowest price at the green candle where you are buying, or below a major support, something like that, right? You have to decide what price you will buy at. You have to set your target according to the long tool, right? Because see, here you are doing a bullish trade, so you have to use the long tool. You have to ensure that your target price is such that the risk reward ratio is 2 or above. Okay, and using your position sizing, suppose you have 100,000 rupees per year, only 2% of that is 2,000 rupees you can give to this trade, and divide that by stop loss. It will give you the number of shares, and you have understood this in the previous video. So you have to do all these calculations, and you have to buy the shares. Once you bought the shares, you have to wait and watch. Okay, and while you are doing so, if your target is hit, you have to think now: is the price going to go up a little more? If you feel that according to your indicators price is going to go up, then you can trail your stop loss and update your targets to a little bit above, and again go back to wait and watch. If you feel that the price might not go up, it might you might get a reversal or it might go into a flat trend, then you please book profits and you exit the trade. Okay, if your stop loss is hit, this is where you have to have a stable mind. You have to understand that all trades cannot give you profits. This trade has given you loss, but instead of staying in the trade, you would like to stop your losses and exit your trade. Okay, so book loss and exit the trade. Happens to all traders. We have to bite the bullet and get out of the trade. If the reversal happening even before the target is hit, then book profits and exit the trade. Okay, so this is the suggested algorithm. Again, this is my humble opinion, and it depends on various traders how they would like to tweak or modify this. So if you want to look at a flowchart for this algorithm, we can look at it. Now, WW stands for wait and watch. BU-TR stands for bullish trade. BE-TR stands for bearish trade. Okay, so you start and you study the market at the primary time frame. Okay, and you ask whether the primary trend is bullish. If the primary trend is bullish, if the answer is yes, you proceed in one way. If the answer is no, we'll come back to that. Okay. If the answer is yes, study the stock price in the secondary time frame. Okay. Once you study the stock in the secondary time frame, ensure that you have all the bullish reversal signals. You have a green candle with good volume. You have a EMA crossover, positive crossover. You have a bullish candle or chart pattern. You have a MACD, RSI, DMI, all three giving you bullish signals and all that. Okay. If these all signals are there, and if you get all these signals, if it is an yes, then you take a bullish trade. That's why I have said if yes, then BU-TR, bullish trade. If you don't have a good volume still, or if your EMA is not giving a positive crossover, there is no chat pattern, or your DMI is not giving you a bullish signal, then you have to wait and watch. There is nothing else you can do. Okay. So remember, some traders say that even though I don't see a bullish chart pattern, if I have some of my indicators like MACD, RSI, DMI giving me a bullish signal, I will go ahead and buy it. So that is okay. So maybe out of these 4 or 5 indicators, even 4 of your indicators are giving you a buy signal, that's okay. But if only 2 are giving you a buy and 3 are not going according to what the bullish signal must be, then you have to really think whether you want to buy or you want to wait and watch. Okay. And if the primary trend was not bullish, and if the answer was no, then you see if the primary trend is bearish. Okay. If the primary trend is bearish, you study the stock price at the secondary time frame. Okay, or what is known as the wave. Okay. Here now if you want to take a bearish trade, if the primary trend is bearish and secondary time frame you want to take a bearish trade, then you have to have a red candle with good volume, and EMA should have given you a negative crossover. You must have a bearish chart pattern, and your MACD, RSI, DMI must be giving you bearish signals. See, this is exactly opposite to the bullish trend. Okay. If all the signals are bearish, if it is a yes, then you take a BETR. BETR is bearish trend. Okay. If some of the signals are not there, if the volumes are not good, what you do? You have no option but to wait and watch. Okay. If the primary trend is neither bullish nor bearish, it could be a flat trend, right? Then what you do? If it is a flat trend, you can study the stock market in the secondary time frame. Then what you do? See whether there is an upward or a downward breakout from a flat pattern. And one of the you studied the flat pattern in the previous videos, either a flag and pole pattern or a triangle pattern or a Bollinger Band. Any of these flattish patterns, is there an upward or a downward breakout from such patterns? You study the secondary time frame and find out. Okay. If your answer is no, there is no breakout, then you have to wait and watch. Nothing else can be done. If there is a U for upward breakout from these pole flag patterns or flat pattern in the secondary time frame, then you take a bullish trade. Okay. If there is a downward breakout from the flat pattern, then you take a bearish trade. Okay. And when you do a wait and watch, you go back to studying the stock price at the primary time frame, and the loop continues. Okay. So this is the flow chart. So assume that you are in this flow chart, and after going through all these steps, you have decided either you will take a bearish trade or a bullish trade. If you're doing wait and watch, nothing. You will be going round and round in this flow chart itself. But assume that you got a good green candle, and you got all the bullish indicators giving you a bullish signal. Then you have decided to take a bullish trade, or vice versa, you have decided to take a bearish trade. So whatever the case might be, if you have taken decision to take a bullish trade or a bearish trade, then you calculate your stop loss, like we discussed in the last video, how to put your stop loss. You do calculate your buy price, your target using the long tool, and also you calculate the number of shares, right? And then if you are doing a bearish trade, then you have to use the short tool instead of the long tool. Okay. Then you place a buy order if you are taking a bullish trade, and if you are taking a bearish trade, you will be placing a sell order. Okay. After placing your order, then you have to wait and watch. Okay. So you have to wait till whether till either your target hits, or your stop loss is hit, or a reversal is happening before your target is hit. Okay. So let's see all the cases. If nothing is happening, neither target has been hit, nor stop loss is hit, nor a reversal is happening, then you just be in the trade, wait and watch. Okay. Suppose your reversal is happening. Okay. Target has not been hit, reversal is happening before the target is hit. Then you have to book profits and exit the trade. Okay. But what if your stop loss is hit? If your stop loss is hit, like I said, have a steady mind. All the traders all the time cannot make profits. They will have 30% of the trade go against their planning. So bite the bullet, have a steady mind, book loss and exit the trade if the stop loss is hit. If the target is hit, ask yourself, is there a chance of stock price going still up? Okay. If the answer is yes, then you trail your stop loss, you increase your target, and you wait and watch. Okay. Back to wait and watch. If you feel the price might reverse, or it might go to a flat trend, then you just exit and book your profits. So friends, this is the algorithm. Okay. So this is a suggested algorithm in my humble opinion, and again, it depends on trader to trader how he or she would like to tweak this and utilize this. Okay. Now, if we apply this algorithm to an example, for example, if we take HDFC on 12th March 2019, if you look at my mouse cursor, if you see the weekly time frame, which is the primary or the tide time frame, the stock has gone up, gone down, up, down, and now it is sort of showing signs of reversal. Okay, so you can see even in the weekly time frame, you can see a sort of a double bottom getting formed here, right? W getting formed here. And if you look at the MACD, remember MACD is a lagging indicator, so it is showing somewhere in the future this blue line is going to cross this orange line. So yeah, it says in maybe in a couple of days or in the next week or so, we'll have a positive crossover, and MACD will be bullish in the weekly time frame, is what it is saying. Okay, so if you look at the daily chart now, okay, because we have to since the trend is bullish in the primary time frame, we now have to analyze the stock price in the secondary or the wave time frame, which is daily for us. So in daily also, you can see if you look at my mouse cursor, you can see this blue line and you can see double bottom chart pattern forming. Okay, that is one thing. You can see that there is a support at 1833, and there is the neckline of the double bottom is at 1930. Okay, and as you know, the studies say that if you have a double bottom, whatever the distance between the support and the neckline, the target, the same distance can be the target for our share price to go up. That is being said by the theory. Okay, and if you look at the if you look at the EMA, which is a 5-day EMA, which is this blue graph here. If you look at my mouse cursor, this is the blue graph, and the red graph is 26-day EMA. Okay, you can check the 30-day EMA also, but just to make it simple, I've just compared 5 and 26. So the 5-day EMA is doing a positive crossover here on this day. If you look at 12th March 2019, there is a positive crossover. The blue EMA is crossing this orange EMA, red EMA, which is the 26-day EMA moving average, and you can see that we have a green candle. We have a good volume. The size of the candle is okay, not very good, but we have a good volume above average, and MACD is also bullish here. Okay, and further, if you look at other indicators, your RSI is also around 57, and it is in a upward trend. So this is a bullish signal, and the blue line in the DMI has just crossed the orange line of the DMI, which means this is the DMI is also giving you a buy signal. That is a bullish signal, and your ADX is around 28, so there is no exhaustion here. Since it's around 25, there is good strength. So because of all these reasons, definitely we can go for a bullish trade for HDFC on 12th March 2019. Okay, so if I go to the our indoor trading view, you can see here's the situation, and you can also see that as we discussed, our stop loss we have put at the lowest point of the green is somewhere here. It's around 1900. I have put my stop loss a few 10 points below that. Okay, at 1890. Again, if you want to play it safe, or you want to be aggressive, it depends on the trader whether he puts it exactly at the lowest point or he puts it little below the lowest point. And we are buying it currently. It is at current close price. You can see it is at 1930. You can see here current close price is at 1930. So I'd like to buy it 1931. So if I buy it, try to buy it 1931, and my stop loss is at 1890, then 41 is my difference here. And if I have 100,000 rupees and I want to only spend 2% of this trade, then I can buy 48 shares. Okay, I can buy 48 shares, and I can use the long tool here, and I have placed the long tool at my stop loss, at my buy price, and target. When I put it to the target predicted by this double bottom pattern, then I'm getting a risk to reward ratio of 2.32. Okay, so that is great. So looks like all things are okay, and we can go ahead and buy at 1931, and let's see what happens. So good, stock is going up. Okay, there's a red candle. Okay, looks like it's still going up. You can keep watching this. Looks like our RSI is gotten down to a downtrend, but let's see. And even the DMI is the blue is going towards the orange. I don't know if it will reverse. So let's give it a few more candles. Okay, my stop loss is not hit yet, and neither is my target. So I wait and watch. Okay, I'm getting some green candles. Good. Okay, so here on the day of 4th April 2019, you can see that the target what we set for ourselves, that's 2025, has been achieved. Okay, now the if you look at the DMI, the blue is much more than the orange, and it is going away from the orange, right? It is going out, right? It's expanding, right? So I don't see the share price coming down anytime soon. I don't see it going flat or a reversal. And your RSI is also uptrend, and it's around 67. It's good. MACD is also good. So I think I can trail my stop loss. So what I will do, I will just delete this 1 second. Okay, I have bought it at 1931. Remember that. I'm going to take my stop loss. I'm going to put it here. Okay, maybe at the bottom lowest position of the previous candle. Let's see what is that. That the lowest position was 1997.15. If you look at it, I'm going to put it at 1995 maybe. Okay, so I'm just going to go to settings and make this 1995. So I'm trailing my stop loss, right? So okay, so 1995, I have trailed my stop loss, and probably we can see how high it goes. We can increase our targets. Maybe our target which was met here was around 2025. Maybe we can hope that it might go up till 2058 or something like that. Okay, let's see what happens. So again, next day it goes up. Okay, here you can see the reversal happening. Okay, so so I think this might be a good position for selling, because you can see RSI is giving you a downtrend here, and it's following, and your MACD is also converging, and the blue and orange of the DMA are also converging. So instead of waiting for it to fall further, probably I can sell it off here. Okay, maybe I'll sell it at 2023. Okay, so I'll go to settings. I'll say sell at 2023. Coordinates 2023. Okay, so I bought it at 1931, and I hit my target somewhere here, but I trailed my stop loss, and when it started a reversal here, and have sold it at 2023. So basically, what is the profit? The profit is let me take this tool, the measurement tool, price range. So price going from 1931 to 2023. Okay, so yeah, so it's 94 rupees profit basically. Okay, so basically, we have gained the profits, but just for this is back testing, I would just like to see what would have happened if I didn't sell it there. Okay, so let me just out of curiosity see it's coming down. it has hit my stop loss at 1995, the trail stop loss, and it's falling even further. See, I bought it at 1931, and now the price is very close to that price. It took a support at the price which I bought, and it's continuing and so on and so forth. Okay, so this way we have used this algorithm. So basically, going back to the presentation, this way we have used this, applied our algorithm and flowchart for taking a bullish trade. Okay, thanks, friends. We will continue in the next video.